right, ladies and gentlemen, I will introduce our next guest here. Again, Pennsylvania REIT. We have Joseph Corradino. Joseph, are you there? Oh, look at this. This is a nice setup you guys got here. How you guys doing today?
I'm here.
What's up, Joseph? Who you got with you there?
I have with me Heather Crowell and Emily Friedman.
Nice. Well, welcome. How's everyone's day going?
We're going good.
Nice. Well, I will let you take it away. Tell us a little bit about your company. It is ticker. I don't want to forget to mention the ticker. It is ticker PEI, Pennsylvania REIT.
That's right, PEI. And the theme of this presentation today is pretty simple. Business is back. Things are returning to a state of normalcy. We're seeing increases in all areas of our business, and we have a great expectations for the holiday season, which really, as we talk about holiday, is upon us. Back to school, Halloween, Thanksgiving, Christmas, Hanukkah, etc. The next 4 or 5 months are going to be key. So when you think about all of that as it relates to PREIT, the slide you have up there, I mean, we've done a real transformation of our business, really focused on maximizing the value for stakeholders. And our business is unique in the sense that, we have a number of constituencies, obviously businesses to move into our centers. We create jobs. We are a key part of the communities in which we're in. And we obviously are very much dependent upon customer traffic. And all of those things go into the PREIT mix, the PEI mix. Next slide. So we've been at work for over a decade now, really solving a lot of the problems, the issues that people are just beginning to talk about. And the first part of that was really beginning to introduce new and different tenants to our properties. We refer to them as non-traditional, and they would include things like restaurants, entertainment, fitness, off-price, big boxes. And as part of doing that, we sold off 18 lower quality malls. We often hear the saying that, our country is overstored, is overmalled, where we're not, because we've solved that problem already. And, we frequently hear that, malls are very homogenized. They're all the same. We're not. We've changed that already. We've introduced restaurants, entertainment, fitness, off-price. And we're going beyond that today to include multifamily apartments, medical, senior living, hotels. I mean, our properties are given their location in the major markets they're in, are places where they draw many different uses. And what was a very small group of prospective tenants that we thought about as mall rats, now that group has expanded dramatically. And some examples of the work we've done, and kind of survival of the fittest, if you will. If you look at this slide that's up there now, anchor replacement capabilities, there's a couple of stories there I think that are relevant. Let's just pick out Capital City Mall in Harrisburg, right? There were 3 malls in Harrisburg, and several Macy's stores. Now we have the property with the only Macy's store. We have the only Dave & Buster's, and we really are sort of the last mall standing, if you will, and are commanding. We're 96% occupied at that property, and sales are exceeding pre-COVID 2019 levels. Same story with Dartmouth, only a bit more dramatic. There were 3 malls in that market. The other 2 have been torn down. We've replaced our Sears store in that with Burlington Coat. Aldi is about to open. So all of these stories that you see up there for these properties are places where we replaced underperforming tenants with much higher traffic driving, higher credit quality retailers that are, continuing to sort of bring the mall to the next level and bring in new customers. We like to classify our assets really in three categories. Fortress destinations, and they're the properties that, like Cherry Hill Mall and Woodland Mall, that are real trophies, that continue to be generate tremendous customer traffic and sales well above national averages. And then we have the high barrier to entry market properties, and they're properties like Moorestown Mall and Plymouth Meeting, where they're located in densely populated markets with a real scarcity of land. And I referred to the third category as last mall standing, probably more appropriately called winner take all, where we've seen competitors fallen. We've gained tremendous market share and continue to expand our customer base and drive occupancy and traffic. Now, I said that we're back, business is back, and that's really evident in our financial highlights. Our same store NOI is up 62%. Yes, 62%. We've got significant liquidity at over $100 million at the end of Q2 and improving. We've got FFO per share exceeding plan at 10%, up an amazing 267%. Now that really demonstrates the recovery from COVID. Nothing can be said better than how, what a difficult and dire situation we were in a year ago compared to where we are today. And we're seeing core mall sales. Now, this is a key piece of data, 16% over June, right? Sales are, increasing dramatically. We're expecting to have our July sales in a few days. So we're quoting June. So if you look at our operating highlights, you can see that our rolling 12 months are estimated at $549 per square foot. That's a key metric in our business. We've increased over 1.3% over the last reported comp sales, which is February 2020. Core mall lease space is at 92.6%. Again, moving in the direction of normalcy. Want to see that number, and we think it will continue to improve given the pipeline of leases that we've signed for future openings. We've got about 500,000 square feet of leases for future openings that'll generate about close to $11 million in gross rent when they're open on an annualized basis. And, we've got a number of things under construction in our portfolio, including Aldi at Dartmouth Mall, which I mentioned previously, that'll be opening up Q3 21. Again, if you look at the portfolio, there continue to be great stories to tell as this recovery takes hold. We've signed Phoenix Theaters to replace a former theater at Woodland Mall. Yes, a new movie theater is going to open up in Grand Rapids, Michigan. Home Goods, part of the TJX chain, will replace the former Bed Bath & Beyond at Cumberland Mall in New Jersey. We have a new retailer, Turn 7, to replace the former Lord & Taylor at Moorestown Mall. You're going to hear more and more about Turn 7. It's a store focused on reselling internet returns. And it's owned by the former owner of Foreman Mills. Those of us in the Northeast remember Foreman Mills, right? This is Rick Foreman, who's going to be operating Turn 7. They'll be opening up in October, a little more than a month. And our properties welcome 15 new tenants across the portfolio in the second quarter, over 120,000 square feet of space. And we're seeing expansion from tenants like Aerie, Offline, their new athleisure concept, Rosen Remington, Windsor, Purple, and the list goes on. The location of our portfolio really gives us the opportunity to add a blend of uses to them. We're currently in process on over 2,000 units at 5 of our properties that we anticipate to generate $87 million in proceeds. And that will obviously be used to improve our balance sheet, which is one of our key objectives. An additional opportunity, there's another 600 units at 2 properties to generate another 20 million. And that's not the end of it all. We have 3,000 additional apartment units in our phase 2. And we're also now have initiatives with respect to hotels and senior living and medical uses, etc. So the mall, it's not your grandmother's mall anymore. It's a very new and different place with not just traditional mall stores. It has, the blend of uses that I spoke about. 30% of our portfolio has open air tenants, the kinds of tenants that you would find like Burlington Coat and Dick's Sporting Goods and all of the TJ Maxx operators, Michaels, etc., that are operating in a mall environment. I think testimony to the quality of the locations and markets that we're in. So if you think about the value creation roadmap from there, obviously hopefully we've demonstrated today improving NOI. We also through monetization of a number of our assets, both land for multifamily and other types of uses, will continue to reduce debt. We believe, and pundits are now coming online with us, that we'll see further cap rate compression and a return to normalcy. Given our diversified tenant mix, we expect that we'll see significant improvement as a result of that. And again, a return to normalcy. And hopefully the market will recognize this by an improving share price. Now I'll open it up for questions.
Couple of questions here, a couple of good questions from the chat. The chat was definitely getting engaged here with you guys. Wanted to know, there was a comment here from Joe Costanza. He said, wow, malls becoming the new localized Disneylands for families. And I think that was a theme that you were sort of touching on. And I wanted to ask, what kind of trends in your tenants are you seeing as far as like experiential is going? Are there, you mentioned a theater, you mentioned, I saw a pizza place in there. I mean, are these retailers focusing on more of like an experience? Do you have that feeling?
Yeah, I think it's the retailers and it's us. I think we have to, create experiences at our properties, and certainly, theaters are part of it. Restaurants are part of that experience, but we've got a number of Dave & Buster's in our portfolio. We're in process right now with several transactions with a company called Tilt. We've got Round One, another entertainment concept out of Japan, operating in several of our properties. And we're looking to expand that list as we speak with some new names. So I think it's important that we bring in those kinds of tenants. Now the traditional tenants as well are focused on experiential. I mean,
right.
From REI with their climbing wall to Lululemon with their yoga classes.
Good point.
I mean, we've got to be more than simply a place for people to buy jeans and tops.
Yeah, absolutely. That's a really good point. I wanted to ask you, you mentioned something, Joseph. You said core mall rolling, I think 12-month sales is a key data point. And, we have a ton of investors out in the audience. Could you give a heads up to some of our viewers? What are like 2 other key data points that management is focused on so that when they're looking at a bunch of real estate related companies, they know which data points to focus on?
Well, I think overriding that, and I'll answer your question directly in a moment. I think part of it is a story, a positive plan that indicates a direction towards success, if you will. So when we look at our portfolio, we look at a couple of things. One, as I mentioned, sales per square foot, because how the retailers are performing is a key data point for us. But also, I mean, obviously, occupancy is key,
Okay.
right? I mean, we saw a fall off of stores that did not reopen post COVID, and we've got we're anticipating that we will lease this year double the amount of space that we leased in 2019. So that data point is occupancy. One needs to see a continuing improving occupancy. And certainly balance sheet metrics are part of it.
Sure.
And again, a plan to, continually improve the balance sheet. One of the things that we're pleased about is, we just refinanced 5 of our properties, and they were refinanced at very attractive rates and with no additional margin payment. And that's, again, a key thing, that the properties are of a quality that they will draw interest from, traditional lending sources as well as the CMBS market.
Awesome. Thank you for answering that, Joseph. There was a question from the chat about management and management changes specifically. Have there been any management changes lately?
Well, our CFO is relatively new, been in the seat for a couple of years, I think 2 years. Other than that, we've made a couple of promotions within our ranks, really focused on, first and foremost, driving quality, personnel to focus on the portfolio, but also with an eye towards diversity. And I think our company is proud of the diversity in the management team, and we've done a good job of executing our business plan, particularly when one looks at our peer set.
Awesome. Well, thank you for joining today, Joseph. Pennsylvania REIT, it's ticker PEI. Have a great day.
You too. Thank you so much. Blow that horn.
Oh, yeah. There we go, Joseph.
Blow that horn. There you go. That's it. Thank you. Appreciate your time.
Yes, sir. Thank you very much. Have a good day.